What's up, guys? We're going to be doing a weekly review. So, we're going to be talking about this past trading week, first week of October, actually, and I had a pretty strong week. Really nice start to the month. And I want to go over some of the TradeZella stats here and specifically talk about how I capture a high R multiple on my trades. A lot of people try to say that this is unobtainable, that you can't get high risk reward trades. Now, what they say is that in order to do that, you need to get sniper entries to the tick with tiny stop losses and then capture the entire move of the day. I agree that's not really obtainable. That's not how I do it. I successfully get a high R multiple on my trades by scaling into my positions as they're going in my favor, but moving my stop loss with price to keep my downside capped at what that original dollar amount of risk was. Now, if that's confusing, I'm going to get a little more in depth into how I actually execute on that. But first, we're going to get into the TradeZella stats because I think they're really interesting to kind of see it up front on how the statistics play out for me because I have a different kind of win rate. I don't have an 80% win rate. It's a bit lower, but I have a very high R multiple. So it counteracts that lower win rate. And that's what I think is interesting about this. So if you're into that, stay tuned and we're going to get into the stats right now. All right. So now that we got TradeZella pulled up, we're just going to go over all the stats here and then I'll explain a few things. So number one, P&L. Now this is just for the first week of October. So net P&L 5,700, and I'm trading 4 different accounts. So just to be clear, I am copy trading 3 of my straight to funded Tradeify 50K accounts. So that P&L is in there, and then I'm also trading a 100K MyFundedFX CFD prop firm account. So altogether, this is the cumulative P&L on those 4 accounts. Win rate 24%. Now, a lot of people would see that win rate and think that this guy can't trade, but the P&L says otherwise. And I'm going to get into again how I do this with a high R multiple. Profit factor 2.29. Day win percentage. Now, it was 100% this week. Just to be transparent, it's not always 100%. I would say when I'm locked in, I usually have maybe 1, sometimes max 2 red days out of the week. That's kind of a normal week that is still ends green, but it's not uncommon for me to have, all 5 green days. I mean, it happens, but it is less likely. Usually when I'm locked in, it's 1 or 2 red days max. And, that's actually something I want to talk about because if a lot of people would say if you see someone with a low win rate, but a high risk reward, they probably lose most of their trading days, right? You would think, oh, well, he's probably red most of the time, and then he has 1 win where he kind of wipes out all those losses for a day. It's not really how it works. For a swing trader with a high risk reward, that might be how it works. This is the beauty of day trading. I mean, I'm executing on the 1 minute time frame. So all of these losses that I'm taking, these paper cuts, they're happening in really short time frames. So I might take 2 or 3 losses in the morning, then catch my 6R win for the day and be done, locked out of the account by 10:30 with 1 win, 3 losses, and I made money. And that's how I'm able to have a higher day win percentage with a low actual win rate. Now, average risk reward, 7-1. So if you see right here, my average loss per account, now I am copy trading these accounts, but per account, my average loss is $64 with the average win being $463. Now, this is what I want to talk about because a lot of people would say this is totally unrealistic, but it's not. It's very realistic if you know how to scale into your positions that are going in your favor. And that's what I'm going to get into the markups here. But I really wanted to go over these stats to show you this is not insane. This is not furu stuff. It is very realistic to trade like this, but you need to know how to manage positions, okay? I am okay with taking those paper cuts because it is all happening in the span of 1 day. If I was a swing trader and I needed to take 3 losses and I was waiting days on end for a trade and then I lost 20, I lost 75% of them, that would be way too frustrating. I would never be able to do that. But as a day trader, I am perfectly fine with taking 2 or 3 losses as I'm kind of feeling out my position. And then when I get that correct entry, I know to press it. I know how to scale into that and really squeeze out the profit of that winning trade. And that's how I'm able to have a lower win rate from an execution standpoint, but a very high daily win percentage. All right, so that's what we're going to get into. Now, I want to go over my daily journal and show some markups. So let's get into that now. All right, so let's get into the daily journal now. every day after my trading session, I like to write a brief summary of kind of how my day went, what I did right, what I did wrong. And I like to post markups to really kind of visualize it. So if you see here, I'll do a brief summary, talk about what happened, what my P&L was, and then I'll post markups of the trades that I took. I think this is really important. All right. If you're not journaling, you're not going to remember what you did right or wrong. All right. It's all going to be a blur. This really helps me to reflect on what I did so that I could actually correct mistakes and then also recognize what's working so I could push into what's working. So these are my equity curves. You're going to see they're pretty similar. For each day, I'll usually start the day a little red and then I will end the day green. So if we go to Monday, start red, end green. Tuesday, I actually just took one trade, so it was on my Tradeify accounts. So it's showing three, but it was three accounts, one execution. That was one of the outlier kind of days. I won my first trade and I closed the account down. This is the best part about high risk reward. There are going to be those days that you don't take a single loss on your trade. Your first entry is going to be perfect and you're going to catch that 3, 4, 5R. And those are the best because then you can just lock it down and just come back tomorrow. But more regularly, we'll start red and green. This day was a little bit different and I want to talk about this. So it looks like I was a lot more red and then I kind of just saved it by being green. But like I was saying before, I trade two different sets of accounts currently. So I am copy trading my futures Tradeify accounts, and then I am trading a singular 100K CFD prop account. Now, the reason I like to do this is it spreads out my risk, right? So if I take a couple of losses in the morning on one set of accounts, instead of trying to just hammer those accounts and get them deeper into drawdown, I'll just flip to another account. And if I'm green on that one, it kind of counteracts the day. So, I think I ended the day like negative 1,200 on the CFD prop firm account. And then I took a couple of trades on the Tradeify accounts that were, I think it was like a $1,500 win. So it just counteracted and it was like a $400 win. For me, it works mentally because I don't have to just be full red. And if I'm red on every account. But that's preference. Some people like to copy trade every account they use. You can have huge gains that way. I personally like to spread out the risk a little bit. Thursday, again, though, red, and then we go green. So this is how I'm able to have a pretty high daily win percentage because I'm taking these small paper cuts, and then my wins are significantly bigger because I scale into the positions. So let's just get into one of the journals. So I think we should go over Friday's action. Now, Friday, I didn't write a summary on my journal. I had to catch a flight, so I took some trades in the morning, had a nice win. I just didn't have time to do the journal because I had to get to the airport. But the markups are still pretty helpful. So this was my first execution of the day, and this is how we're going to talk about how I add into these positions. So if you see here, I was looking for shorts. I had a short bias since the morning. Now, this is actually in the pre-market. So this is around 5 a.m. New York time. I was looking for previous day's low to get taken. I'm not going to get super into the technicals, okay? I just want to talk about the trade management here. So took one try, negative 1R on my Tradeify accounts. No add-ins, so I did not add into the position, right? This is important. When you're scaling into positions, I do not scale into losers, all right? I don't add into my position as it's going against me. That is counterintuitive. All you're doing there is increasing your risk. That's how you get blown out. I only add in when the trade is working for me, when it's showing that my execution and my thesis is correct. That's how you can manage risk effectively while increasing the R multiple. So that was the first execution. Now let's get into the second. So number 2, this was the winning trade. Now, again, my first entry is right here and we talk about it. First entry, 3 contracts. I was looking for the data lows, the 8:30 a.m. candle to get taken out as my draw on liquidity. And this is my first add in as it's going in my favor. So we made a lower low, a lower high, another lower low. And on the retracement, as the trade's going in my favor, that's when I add into my position. So why do I like to add in as it's going in my favor? Well, like I explained before, I don't want to increase my risk. That defeats the purpose of this. Let me just explain this. If I get in here with 3 contracts, right? And then as the trade goes in my favor, I add in another 3 contracts. what I'm going to do is move my stop loss down to either break even, or I'm going to move it to whatever my original risk was. So for example, on this trade, I was risking $150 per account. So I am not going to keep my stop loss up at the original placement, because if I do that after I add in, instead of a $150 risk, it's now turned into a $300 risk. That defeats the purpose of catching a high R multiple. What I do is I now can safely move my stop loss down to either break even, which is what I did in this case. So as I added in on this candle, I moved my stop loss to break even. This became my average entry because I added in more contracts to the trade. Now, you could do it like that, or you could just put it somewhere up here where it would be, whatever your original risk was. So you can either keep your original $150 risk, or you can move it to break even. Now, what this does is, I think this was like a 3R trade, maybe a little over 3R. But because I added into the position, it's no longer a 3R win, right? Because I have more money working for me now. I think it went to like a 6R position relative to what my original risk in dollar amount was. And I was able to double my R multiple without ever increasing the risk. And that is the key here. Now, if you are interested in learning how to add into your positions like this, you should watch me on ASFX TV. I trade live 2 days a week, and I'm going to be trading in the PM session soon, running one of my own streams. And I'm going to be doing this in real time. I've been doing it for months. So check that out. That's on ASFX TV. And this is the key, adding into your positions as it goes in your favor. That's how you can catch higher R multiple. So, all right, guys, have a good one.